Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, December the 7th. Wow, it's unbelievable. We're almost at the end of 2012. Time really does fly. So let's take a look at the market, starting out with the Dow Futures on the daily chart like we usually do. And interesting action in the markets this week. In the last couple of videos, we were talking about, the importance of this downtrend line here. And looking for a pullback. It looks like this was the pullback, in and around this level, where the green line is. And we broke above that trend line, and then we had some action where we came back down and, sort of tested the top of the trend line. And the key thing here is now you can see all of these moving averages. You've got the yellow line, which is your 8 exponential moving average, above your 20 period exponential moving average. So now that's sort of like a moving average. From a moving average perspective, a confirmation that the market is changed bias and changed direction. So you already had these indications in some of the other indicators I use. For example, in my trending indicator, this is a proprietary indicator that I wrote. In the MACD, you had a long bias in both of these indicators. You had a long bias in the stochastics. You had an oversold, an oversold situation there, and we were potentially looking for a bounce in some of these areas, But that said, okay, that's great. That's happened. That's in the past. We were talking about how if we broke this trend line, that's really what we were looking for. We were looking for a little bit of failure at the test, a pullback, and then a push through. So we did get that. And that was one of the scenarios that we were, strongly leaning towards. Anything can happen in these markets, but that was a scenario that I was really, really kind of made sense to me in the last few weeks' videos. So where are we now? Well, where we're at now is essentially you have, a move from, for example, let's take a look at the fibs from this high. From this high up here to this low down here, we've got the fibs drawn on the chart, and you have a 50% retracement and a 61.8% retracement in and around these levels. So last week, if memory serves me, what we were talking about was this 61.8% retracement was the challenge point last week, and you can see we couldn't get through it. Okay, so this is Friday, Thursday, Wednesday, Tuesday, Monday. So you can see we came close to it. We couldn't get through it on Monday. On Wednesday, we came up. We couldn't really get through it. So really where we broke through it was we had really strong action at the end of the day Friday. So usually when we close out the week strong on a Friday, that's very telling. Now you can see the stochastics are a little bit overdone. This thick blue line, these are the shorter term stochastics, and the longer term stochastics, the cyan and white line, the thinner lines there, they can stay overdone for a long period of time. They can stay, overbought for a long period of time. And that's just really indicative of, stronger trending action like you have, over here in this area, in this situation here. So I'm not too concerned about those stochastics being, overbought to the short term, right? But what I am concerned about is, and it's not really a concern, but the fast stochastic here usually is indicative of, when you get up there, up and around these levels, you're probably going to get a short-term pullback. So I'm looking for some type of short-term pullback up and around these levels for that reason, from a technical perspective. And if you look at the major challenge points, you have two major challenge points of resistance over top of us, just above us. So those two major points of resistance, I'll just change the pen to red. 13,200 is a key level in this market. This was the level that we needed to break above to get through these previous highs over here. You can see we sold down from there. We pushed back into it, we consolidated, and then we really pushed off. And then this level became support over here, pushed off, You know, we had a little bounce here and then it broke through. And then you can see we came back up. We retested this level. We couldn't get anything going in and around this area, and then we failed this level. So now we're coming right back up in and around this key level of 13,200. So I'm expecting, based on what I'm looking at, you know, and what I mean by that is I'm looking at, you know, you've got stochastics that are overdone here. You've got the MACD testing, you know, from an indicator perspective, resistance here where it's testing its zero line. So this is sort of, you know, indicator resistance in the MACD. It's zero line. It hasn't crossed over. It's just testing that zero line. So I know we have a hard level of 13,200, which is resistance, for the reasons that I explained, you know, the price action going off in the past. And then you also have this minor downtrend line coming into play. So you've got all of those factors leading into a resistance zone in and around here. So would I be surprised on Monday or Tuesday if we kind of pushed into this level and even broke above it a little bit, maybe even as high as this trend line, and then we found resistance and then pulled back down into support? No, that's kind of what I'm looking for. Personally, from my perspective, that's what I'm looking for. I'm looking for kind of a push into some of these resistance levels, either at 13,200 into that trend line, finding potential resistance, even if we get like an extension through it, you know, just to spook the anybody who's short in this market, just to kind of stop them out, or just to kind of, you know, just get a little bit of excitement, you know, in the price action through those levels, you know, either like that or even like that, find resistance and then pull back down, you know, into some of these rising support levels like this trend line, or, you know, the 20 exponential, that's some terrible writing, the 20 exponential moving average, which is, you know, this white line down in here. So that's sort of what I'm looking at. I still have an overall long side bias, but I think, you know, we're so close to these levels here that these levels now appear to be, you know, liquidity magnets, and we're probably going to come up and test those levels, you know, to my thinking. So having said that, if we look at, you know, market bias from a number of different perspectives, we talked about how, you know, these moving averages have crossed over, and that from a moving average perspective gives me a long side bias. My trending indicator gives me a long side bias. Stochastics are giving me a long side bias. MACD is giving me a long side bias. Aside from the, you know, the resistance points and the challenge points over top of us, from a Fibonacci perspective, we've closed above, you know, the 61.8% retracement in and around 13,100 even. So from a Fibonacci perspective, we're above, you know, the Fibonacci line in the sand. That would give me a bias now to the long side. So we have, you know, moving average long side bias for those reasons, and now we have Fibonacci long side bias for those reasons, but, you know, we're really close to resistance. So that's kind of what I'm looking at. I'm not looking at this point for huge upside potential, but I'm looking for, you know, a test of these resistance levels and then a potential pullback into support, and then we can review the market next week and see, you know, did that happen, and if it did, then, you know, what are we looking at from there? So that's kind of what I have for the Dow. Let's take a look at the sister indices. Okay, so now here we have the S&P futures on the daily chart, and the S&P futures, you're essentially looking at, you know, we're just above the 61.8% retracement around in and around this level here. And if you can't see these levels here, just make sure you expand out your video window to the largest level possible, you know, using some of the control buttons in the right hand corner. And you can also change the resolution settings as well, so that you get higher resolution. Should be able to get up to 1080p. So if you're not, you know, for those viewers that are not aware of that, there are ways to make, you know, this a little bit clearer and bigger so that you can read these numbers. So you know, you're above this this key 61.8% retracement. We closed above it. I think the challenge point in the S&P is going to be somewhere in and around this level that we have marked on our chart, which kind of corresponds with the coincides with the Dow, with the analysis that I just did in the Dow. Let me just mark this red and make it a little bit weightier. And okay, so that's really the challenge point in the S&P, right in and around this level, around 1430-ish. Okay, so let's take a look now at the Nasdaq. I won't even pause the video. Let's just get right into the Nasdaq. So the Nasdaq, sort of the same story, but you've got, I've taken the fibs from this high to this low, and you tested the 50% retracement of this major move, and then you sold off from it. So the Nasdaq is a little bit weaker, and you can see the stochastics have already pulled back into oversold sort of territory, and from overbought, and the indications are a little bit weaker. You can see you're finding, let me just grab the pen here, you're finding resistance in and around the zero line on the MACD. The trending indicator, the momentum isn't as strong on there. You've got a definite crossover here on the slow stochastic, but you're overdone a little bit on the fast stochastic. So would I be surprised to see a little bit of a push down and then a push up? Not really, but you've got, these are your major challenge points on the Nasdaq. It's a little bit weaker than the other two indices. So you've got, I wouldn't be surprised to see at some point a test of the 61.8% retracement, and you can see you have confluence there with this downtrend line coming in right around that 61.8% retracement. So to me, this area looks like a liquidity magnet, and I wouldn't be surprised, to see a test of that, and then we'll kind of have to reevaluate and see what happens from there. Now, if we take a look at the transports, from a Dow theory kind of perspective, we're just really sideways. We're really stuck in this range between, these highs and, these lows, somewhere in and around these lows. So we're really, the transports aren't really confirming either way from a Dow theory perspective. My opinion on that, and this is just my opinion, is that, because we've had a lot of intervention in the markets, that these kind of patterns of decoupling or lack of confirmation between what you would consider sort of correlated instruments or confirming instruments, to me, I think that really happens in those kinds of markets. So not a big deal. We're just kind of looking to see if all the indices are moving in the same direction. It would be nice to see the transports following the Dow. But having said that, let's move on to some key currencies. Let's take a look at the dollar index. Let me just change the symbol here. DXY, no, DX. Okay, let's take a look at this symbol here, the dollar index. And, we were talking about some of these key levels before. You've got a couple of things in play here. This level here around 80-20-ish seems to be your key. You keep trying to resolve itself around this key magnet point. We were below it, we were hugging it, we failed it. Now we're back up above it. So you've got a couple of key things going on here. I think from a technical perspective, you have this is the key level there, and then from a horizontal perspective, you've got this sort of minor uptrend in place. You've got these kind of key support levels in place, this horizontal support level down and around these lows, somewhere in around there. And then you also have now sort of this downtrend line, which is forming a nice little kind of wedge pattern, depending on where you take it from. But I think that looks fairly clean. Now you've got this sort of wedge pattern happening, and now you tested the top of it, and now you're right in the middle of it, close to this key support resistance level. And depending on which way you look at it, it was support, it's support, it's resistance. It's really just a level that you're gravitating towards, and we happen to close above it on Friday. You have some kind of mixed signals in here. And, you had overdone stochastics, and now you're pulling off from that from a short-term basis. But now you've got overbought stochastics on a short-term basis. but you have oversold stochastics on a longer term basis. So, at this point in time, I would be looking to see which way the dollar index wants to resolve itself outside of this wedge. And it's not uncommon to see, this kind of tightening action where we tighten and then we break out one way or another. Or we could just go sideways. But one of the things that we might see is like a fake and break and then a reversal the other way or vice versa. So I'll be watching this kind of pattern to see how it resolves itself. And the first breakout, I'll be watching cautiously to see if it's a fake out. But that's kind of how I'm looking at this market right now. We have the stock indices moving higher while the dollar index was moving higher on Friday, and then it pulled off. So I guess that kind of coincided with, we had a pullback in the morning, and then we closed the indices higher while we had a shoot up in the morning on the dollar index, and then we, closed off of those highs. So this candle pattern could be considered bearish, for the simple fact that, we pushed up and then we, closed, close to the lows. And on the stock indices, we kind of did the opposite where we closed closer to, the highs, which was bullish. So when you look at it from that perspective, on a micro level, you could kind of say, well, this was bearish for the dollar. But we're really in no man's land with the dollar. We need to see how it's going to resolve itself. And, we have some challenge points on both of these instruments, the dollar index and the stock indices, that we reviewed earlier. So at this point in time, I'm just really watching this pattern to see how it's going to resolve itself. Let's take a look at the Euro futures and see if they are, telling us anything. So, to me, the Euro futures are just really sideways. You've got this kind of sideways consolidation in this pretty massive range of 400 ticks or so, but this is the key level, $1.30, and you can see here, you've come up, you've hit it, you pulled back, you started to get some bullish action going on, where you pulled back into support at these moving averages that are now sloping higher. You pushed through the $1.30 level, and then you came right back down and closed below the $1.30 level. So this level is really a key level. It's really a point of contention. If we look at the this market from, let's say, for example, let's take a look at some minor trend lines. So you're still fairly, you still could be considered bullish, bullish on this market, as long as we hold, this minor trend line in the Euro future. So what I'm looking for is, different patterns where if we're just going to go sideways, we could fail this trend line. We could fail this trend line and then come down and retest these lows, or we could hold this trend line and come back up and break these highs. But, these markets are hard to trade if we're just going to go sideways. So at this point in time, I'm just really cautious on the currencies, and I'm just looking to see, how these key levels resolve themselves, if this trend line is going to hold on the euro, if the downtrend line on the dollar is going to hold, et cetera, et cetera. So they're not really telling us a heck of a lot. But, in order to be bullish on the euro, I would essentially need to, and from my opinion, from, the way I look at this, we would need to stay above $1.30 and firmly find support above $1.30. From my opinion, that is really the key line in the sand between long and short, in my opinion. So that's all I have this week. For those of you who have been attending our meetups and have been attending, the Oakville chapter CSTA meetings, we have an upcoming meeting on Wednesday. We have an upcoming meeting on Wednesday the 12th with David Chapman. He will be doing technical analysis of the gold market. So I hope you can all make it out. That's going to be a really great presentation. We're really looking forward to it. Let me just pause the video and I'll link you over to the actual web page. Okay, so we're over here at the CSTA's page, Canadian Society of Technical Analysts. The site is simply, www.csta.org. And if you look at the page here, what you can see is You can join. I mean, it's only 100. There's some good reasons to join, and it's really, I think it's only $125, for the year. And what that gets you is access to, the meetings and a lot of different educational resources in the background that are available, through the CSTA's library, but also, online through their website. You get archived webinars, you get articles, knowledge base from, the sister organization in the States, the Market Technicians Association, or the MTA. You get some stuff from, the European organization, IFTA. So, the CSTA is really a great organization. For those that don't know, I started running the Oakville chapter meetings. We do this once a month, and we have, regular guest speakers. So if you take a look at the homepage, the site has recently undergone some revisions and updating, and you can look at, these are all the chapters that are available in the different cities throughout Canada. This is us, the Oakville chapter. Some of these details need a little bit of updating, but we'll be, we're in the process of doing that. Then if you look at on the homepage, you can come over to, upcoming events, and you can see the Oakville chapter meeting on December the 12th at the Queen Elizabeth Park Cultural Center, Recreation Center. It's in room C094. So what you can do is just click on this link, right? Click on this link, and you can register for the event. So if you're not a member of the CSTA, if you're not logged in, then you'll need to, go through a process. So the first meeting for non-members is always free. We're pretty flexible usually with allowing 1 or 2 meetings for free, whereby, you can assess whether, the organization, the group, the meetings are right for you, and they fit your schedule, and they fit your, your focus and your, what you're trying to achieve. So, after that, they're usually around $20 per meeting, or, $125 for a year membership. So I really encourage all of our members and all of those out there watching these videos to come out and check us out at the CSTA. We get a lot of really good speakers and a lot of good information, coming through at the monthly meeting events. So look forward to seeing you there, and good trading, and have a great rest of weekend.